up in flames. If it all burned down today, I'd build a castle on the ashes. Wouldn't let it all go to waste, I'd still care. And if there's smoke in the air, there's a small fire burning somewhere.
I'll be overboard. I'll be overboard. Somebody put it out.
I came through trying to burn the block. Came through trying to earn a spot. Earned a lot. Like who to make friends with, who to break bread and then hate in your late 20s. Come on. Bad place. Welcome to the bat cave. Where do y'all line up? You let the door close, keep the blind shut. Cause you can find me at the bathtub gin with the half-blood prince and a muggle in the middle singing laugh, love, live. I need no invisibility cloak. Could they see me back up in there singing that's that shit? I don't gotta please everybody on me. I be on the street, probably me and Rob Skeets. Nothing but the wind that's spinning through me. Cause I be in the breeze, in the breeze, in the breeze. Faucet, not a Sarah Sharma to embarrass my mama. Who's man? I don't know the new dance, but I could take shots and I'll be stage ready whenever I face God. Now who stays calm when the butane bombs will melt cities? Get a bottle of wallow and self-pity. Look, left arm got a little left in a Mandy Petty getting through the next inning. I was on beacon, self-seeking, dirty pissing, hedonistic. Look, throwing fits in a fight, 2 tons in a tone, 8 bits in a bite. Come on.
I'll be overboard. I'll be overboard. Somebody put it out. Somebody put it out. I'll be overboard. I'll be overboard. Somebody put it out.
Up in flames. If it all burned down today, I'd build a castle on the ashes. Wouldn't let it all go to waste, I'd still care. And if there's smoke in the air, there's a small fire burning somewhere. If it all burned down today, I'd build a castle on the ashes. Wouldn't let it all go to waste, I'd still care. And if there's smoke in the air, there's a small fire burning somewhere.
I'll be overboard. I'll be overboard. Somebody put it out. Somebody put it out.
I hope the levels never break on you. And a million water droplets is a coming rain on you. And I know it's hard here without a car. I don't know how you made it this far.
Look, I was never looking to settle down. For me, it was way more about the chase. She fell in love with me while I was at my worst, so now she expected my ass to change. But I can't blame her though. I was going crazy, yo. A little cocaine made me feel way more famous, so I wasn't hearing it. I was delirious in red leather suits, not looking for nothing serious. She loving my flaws, but don't trust me at all. Cause when I drink and I sniff and I think with my dick, when I'm off 2 lines, a few drinks, and they run through me. When you crying, all curled up with a dumb movie. So I'ma make my way downtown. I buy a ticket to wherever on the Greyhound now. And I don't care if it ever stops, cause I'll be gone and you'll be
Guten morning. What's going on, guys? How we doing? Told you I'd be here. A little bit early today, but schedule is usually going to be from 7 a.m. to 9 a.m. EST. I'll try to adhere to like that particular time frame, but obviously anything can happen, but I'm gonna try my best. I've been doing pretty good with schedules and all that, so you can pretty much count on it, but you never know what's gonna come around the corner. So Let's go ahead and switch over here. What's going on, guys? What's up, Nature? Constant. What's going on, man? Meme sis. He said, bro. What's going on? NA Clasher. Hola. Hola. So, not much movement in the market over the past day or two. But, kind of what I thought would happen. Because we did not put in the higher high, we didn't have enough pressure to immediately break back down below the support level. So as of right now, it kind of just looks like a double bottom. Looks like it's kind of rounding out here. Definitely, I mean, now that we have the little uptrend here, and we're starting to see a little bit of a slowdown, maybe this kind of just doubles up and we put in that slightly lower low here, which would really suck, obviously, just because I would definitely be stopped out at that point. Because originally, like, if we would have just came down, I guess we did, right? I guess it depends on which chart you're looking at, but technically we did actually put in the lower low here. So there might not be another push to the downside, but it is what it is if it does. Let's go ahead and switch over to TradingView here, just to get a better look. Proper, what's going on, man? He said, whoa, a kite stream? Been a while. Yeah, we're back. We're back, and we're going to be back. Like I said, every 2 days from now on. So today's the 5th. So after today, I'll be live on the 7th. And it's typically going to be between 7 and 9 a.m. EST. That's the start time. So sometimes I might start a little bit early. Sometimes I might start a little bit late. But I will be here every 2 days. So you can look forward to it. So like I said, BTC. Let me see if it's on this chart as well. I believe this is Bitstamp, if I'm not wrong. Yeah, we did put in the lower low on Bitstamp as well. So technically, this is now a full and complete ABC structure, which actually is pretty crazy. So I'm a little bit more confident in this definitely turning into a double bottom with continuation, hopefully to at least retest 88,774. Obviously, I think the market as a whole definitely wants to retry this top here at about 95,000. But if we only get, you know, just the shy number here, that's going to be my next position going forward. So right now we have an A to a B. All right, so the market is trying, at least, to complete some sort of C. Like I said, could be an extended one here. If that happens, I probably wouldn't end up taking this entry as a short position. I would probably be looking somewhere closer to this resistance and see if there's anything developing within the C wave here, such as that. And that's where my position would come from going forward. So as of right now, I am long from 81,660 based on chart, and then my real entry price is 83,267 due to the fact that I did not enter exactly when this position opened. I did enter a little bit afterwards on this candle here, but my stop loss is below, and that is accounted for on leverage. Not risking anything. I think I'm risking 1 or 1.5% on that, so nothing crazy. But nonetheless, hopefully it works out. Let's see how much I learned from my master. BTC bearish and higher time frame. Technically, yeah. It's a little bit of a flip flop here. Okay. I don't fully agree with that sentiment entirely. And let me just go ahead and show you why. I can actually move this a little bit to the side just because we don't have the camera open right now. If we're looking at the macro chart here, first things first, you want to go ahead and mark out your local highs and your local lows of your major trends. Okay. So as of right now, these are our local highs and local lows. All right, so just looking at this from a very simplified perspective. All right, we have previous resistance that hopefully in this region right now is flipping to new support. All right, so just like how we did over here, we have previous resistance on the uptrend. You can see how we're in an uptrend, get rejected, previous resistance, then becomes new support. So that's what we're looking for here, is that flip. So that's one reason to be bullish. Now, if we dump below that, if we dump below this previous resistance and then come back up and confirm it once again, at that point, I now look at that as we are in this range. Okay. So then that's when I would be like, it's completely feasible to come back down to 49,221. Does it mean that it's likely? It's more likely, but it's feasible. And that's what the whole point of looking at the market in this way is to see what are the maximum possibilities within reason, and then work from there with what the market's giving you. So we did put in the ABC top here before we got our significant rejection. So that was one reason to be bearish. So if you saw an A, which, you know, this whole thing was an A, and you saw the market cut into a B, well, at that point, just like how we're doing right now, we're pre-planning our short trade. We know exactly where we're going to be short from if the market does happen to continue going up. Right here, you know, during this downtrend, you should have said, okay, well, if we go up one more time and we put in that higher high, I can go ahead and open up a short hedge position from there. And then it's not about whether or not it would work out, but it did. All right. So right now, with us sitting at previous resistance, and if we're looking at this downtrend, within this downtrend, we see downtrend, uptrend, downtrend. We had a double retest to the downside, trying to go further down, but yet there wasn't enough sell pressure, even with a drop below support, to continue that. So currently, in the immediate time frame, okay, from a macro perspective, I would say that we are more bullish. Okay, now if we are just simply doing a retest and we put in the new time frame bearish pattern, which is bing, all right, and then we confirm that to the downside. All right, does not mean get rid of your longs if you're on a macro account. All right, all that simply means is that this could definitely be a short-term retest to the upside for hopeful support, but then that could easily turn into an A to a B to a C. And if we fail to maintain this support on that try, then we probably would be breaking back down below previous resistance, and that would be bearish. And at that point, that's when you can say, okay, there's lots of room to work with. At that point, it is completely feasible to be calling for 50,000. And when I say calling for, that does not mean that I'm simply just saying it's going to go to 50,000. I'm saying that that is within reason of the maximum possibilities of the range. I always have to be dead clear, and even when I am dead clear, people still don't understand what I'm trying to say. So, you know, they want me to say, oh, it's going to go down to 66,000 and then we're going to bounce, you know, but you can never count on that. I'm looking at the maximum possibilities, and then whatever happens on the smaller time frames, that's when we start making decisions. But just like how in the previous, you know, bull market, you know, I'm looking at the local lows. All right. You look at the uptrend that the bull market was in, and you look at the supports of the downtrends, which are your local lows. So it simply becomes a matter of fact. All right. If we're looking at here, here, and here, okay, it's simple to say that if we fail to hold previous support, then we're looking at the next one as a maximum possibility. So what ended up happening? I said, hey guys, if we fail to hold 43,000, then 29,000 is very likely, okay, that it could be retested. Now, do I ever expect it to go from here to here in one shot? No, not really. That's not really, you know, my plan, but it just so happens that that's what happened. You can see the final price point was here. I mean, it's pretty much in line. So just like how we're doing here, all right, if these are our previous resistances and previous supports, you can see our previous local low here would kind of line up where the retest of this ABC would be. That could confirm as new resistance. Previous support becomes new resistance, helping us trigger a retest to the downside, which hopefully, my hope, is that this would form a larger ABC, and then we can pick up a even better entry point at 76,541. That's my long-term goal. Whether or not we get there, whether or not it happens, is what it is. Kite, aka the Black Swan lover. I love black swans, because the thing is that because of the way that I trade, most of the time I'm in a position where when it happens, and due to the fact that like I have a very particular outlook on the market, I'm willing to hold it when a lot of people aren't. Now, I'm not always going to take maximum profit on it, but for the most part, I'm in it. You know, if the market doesn't have a position for me to be in, then I'm not in it. You know, that's the whole thing. So, I mean, you can't get burnt by a black swan if you're not in the wrong trade. Beauty of hedge positions. And black swan's going to happen to the upside as well. I really don't. I don't get what you're saying, Janor. You said, I'm explaining. You said, why see along? Why? Or do you mean to type U? Why do you see along? If you're still here, buddy, answer me and let me know if you're new to the channel, and I'll explain why I trade the way that I do. But otherwise, I'm going to assume that you're a regular. And you should know why. You should know. Blocky Crypto, what's going on, man? Good morning. How you doing? And Devs, yes. Yes, we are back. I am going to be streaming every 2 days. Usually, the start time of the stream will be between 7 a.m. and 9 a.m. EST. You know, like I said, sometimes I might not make it on time, but I will be here every 2 days. All right, cool. So we got a couple new people. So the main reason why I have the outlook that I do is, one, I don't get too caught up in news, and I don't get too caught up in indicators. I don't think indicators are bad, but you run into psychological problems, which can cause financial problems when it comes to indicators. I'm sure you can create a strategy for most indicators, but for me, I'm one of those peoples where it causes psychological problems. You add, 2, 3, 4 indicators to your screen. Sometimes they're conflicting. Sometimes, they're giving you a super signal and you go too bullish or too bearish and it affects how you're risking your money. It can cause problems. So for me, I just try to keep it as bare bones as possible. Do I claim to be the most profitable? No, but I claim to be profitable. And in the end, that's what we're looking for. So compounding can take over. And then from there, obviously, even the small wins are big to anybody. So very simple concept. And this comes from my past work with Elliott Wave. So if anybody knows Elliott Wave, it's a simple 1, 2, 3, 4, and 5. And there's many different structures within Elliott Wave, and Elliott Wave itself can get very complicated. Now, the main problem that I had with Elliott Wave, just like I have with indicators, is the simple fact that a lot of people are looking for targets. It's always targets, 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 and these magical numbers that don't exist. Okay? And I get it. All right? It's the same thing as if we have a, previous resistance and we get a direct bounce confirming support. To me, do I love to see it? Of course, but I do think it's quite a coincidence. So just the same thing with Elliott Wave. While I do think Fibonacci is really rather cool, when you get caught up in the idea of targets, targeting the 0.382, the 0.618, the 1.618, it's flooding your head with expectations. And I do think expectations are the killer of profit. It puts you into positions that you shouldn't be in. And I do think that you should plan for the worst, prepare for the best. And if you do that, you win. And especially if you create a strategy where you don't have to win often in order to make money. It's the strategies that are always looking for high win rates that seem to be the problem for me and maybe some other people as well. So in Elliott Wave, typically you have a ABC correction. Okay. Now in Elliott Wave, these are typically only to the downside. But my idea is that usually a 1, 2, 3, 4, 5 pattern forms like this. Okay. So let me just kind of shape it up here. Yeah, we'll continue this line a little bit here. Now I'm just exaggerating it to show you, but so usually a 1, 2, 3, 4, 5, you'll have the creation of an uptrend, right, symboled by this line here. Okay, so you'll have the creation of an uptrend, you'll have a break of the uptrend, and then you'll have a retest of the uptrend. Now, from the normal naked eye, it all looks like a giant uptrend, which it is. But within that, there's a break. Okay? So, to me, in order to make sure that my brain can work appropriately with the market, I just need to dumb down everything I see to the bare bones, the bare basics, and develop a strategy that works for me. So, if we go ahead and just connect these, A to B to C, all right, then that's one less thing that I have to worry about. I don't have to worry about 5s. I just have to worry about 3s, ABCs. All right, same structure, just a different way of seeing it. All right, and a lot of what I do is kind of just eyeballing. Okay, I don't have a direct way to say like, okay, this is a trend, this isn't a trend, blah, blah, blah. I have Hakanishi candles turned on, and I'm simply looking for deviations of the normal. All right. It's just me feeling it out. All right. So when I look at, say, this uptrend here, okay, I look at the uptrend as a whole and I'm looking for deviations from normal. All right. So if we're looking at this from a giant perspective, we have uptrend, we have break of trend, we have uptrend. All right. So that creates, to me, an ABC. And of course, as the trend goes on, ABCs can form within it as well. So like down here, we originally had an A to a B to a C, which would have been a short position. And that short position did work out momentarily, but within that short position, we had an A to a B to a C, which is a long position. All right, so in my ideology, okay, an A to a B to a C pointing upwards is a short signal. An A to a B to a C on the downside is a long signal. And the reason why I say this is only if one thing happens. We put in a higher high or a lower low, and then the market either goes back below or back above the original A. Because in human psychology, we have a tendency to want to push boundaries and test things. So if the market's in an uptrend, we usually like to test to see if it will go higher. And if we're in a downtrend, we usually like to test to see if it will go lower. And if the market shows me that even with a breakout above the previous resistance, we weren't strong enough to continue that momentum, even with a buy signal, it tells me that there's some sort of bearish momentum, whether it's on an indicator or not. And of course, if you're looking at the RSI, this could be combined with a divergence, but it's not always. And that's the thing. Sometimes these ABCs work out dramatically without a divergence. So if you are a divergence-based trader, you might not take that trade because you think it's not going to be worth it. To me, I take every single one. All right, because I am a hedge trader. All right, and the way that I work myself through the market is, let's say that we have an ABC long position, and then that long position gets triggered, meaning that price action went up. All right, and then from there, if we get a to a B to a C on the upside, okay, then I would take a short position. Now, between these two levels, I am no longer making money. Well, at least that's what people think. They get discouraged about it because they go, well, now if price action is just moving back and forth between those two levels, what are you doing with your life, buddy? To me, the money has already been made. All I'm simply doing is hedging against it to secure the profit that has been made. Because the one thing that you need to learn in the market is that no matter how good your indicator is, no matter how well you watch the news and decipher what people really think, you're never going to be right. All right? Once you start understanding that all you can really do in the market is mitigate loss and try to capitalize on the best way to do so, and then when those events happen that no one sees coming, and your willingness to accept whatever is happening, you can capitalize on those moments like nobody else. That is the understanding that I have come to over many, many years. Now, I'm very open and upfront. Problem's never making money. The problem is spending money. All right, that's the part of my life that I need to work on. So, and now you might be asking, well, like, you have a hedge position, but like, how do you take the profit? At that point, you're always just kind of like waiting for something to happen. Well, let's say that this short trade does end up working to a certain extent. All right, we have a downtrend, we have an uptrend, we have a downtrend. All right, so now it creates a new bullish position. All right, now only if the market confirms back to the upside. But from this position, now on the, okay, so I should preference this. All right, once I have two positions open, this C wave does not need to confirm before I exit the trade. So let's say that when I open this long trade, my stop loss is, 1, 2, 3% below the entry point. All right, so this is my hopeful profit. This target here, once again, I don't have targets. I think targets are evil. All right, now it depends on which account you're playing on. If you're playing on a smaller time frame account, you can do that. But I think it's the accompanying of multiple accounts with multiple different procedures working in tandem that allows you to have targets on smaller accounts. If you don't have a macro account, I don't think you're going to be successful with a micro account. If you're using AI and you're taking thousands of trades per second, of course, if you're really, really smart, you can work something out. But this is hand trading, in my opinion, and that's just not possible. Well, I shouldn't say not possible. It's very unlikely for a normal person to be able to do it. That's all. Okay. So once again, the target is in flux. I don't have a target. Okay. So I'm just leaving it there for the sake of things for right now. And then once this trade gets active, okay, this is the new trade that opens. All right. So from there, you know, stop loss 1 to 2%, somewhere around there. All right. With that fact, this trade now closes here. The second I see a lower low versus this A, that trade is closed. This original one. So this trade would have been a 26.9 R&R, which is absolutely fantastic. Now, the reason why I do things like this is because it has a lot of ups and downs. There's going to be moments where things work out perfectly over and over and over again, and you get stopped out barely. And then there's times where you're going to get stopped out 5 or 6 times trying to get an entry point. But the whole point is that you have your hedges and you have the continuation trades that you're taking, and it all works out in the end. The issue for most people is getting the hedges started because they're heavily impatient and they have a fear of missing out. So they're kind of just biting at the wind, trying to find something. So now what you're doing is you're exiting that trade because a new one opened. If the market is going to maintain a bullish posture, it's going to be from an either equal or larger structure. All right, the size of the structure matters to me. Okay, how deep the trends are. Okay, so if you have an equal or larger structure, then it is okay to delete the first, enter the second. All right, so now you're shortening the range. All right, so if we're going to maintain bullish posture, we're working from here to here. Okay, and that's the gist of it. Now, what most people say when I explain that is, well, it's one thing to go look at past price action and say, well, you could have done this here and this here and that here, but that is the beauty of what I'm showing you. I am showing you a set of rules that only apply to candlesticks. All right, with indicators that need data to form their curves and whatever else they're doing, those are lagging indicators. So it is appropriate to say that you can't simply say something will work in the past because the indicator told you to, because the indicator can change. All right. But with candlesticks, the only thing that changes is your psychology. So if you understand the rules that you need to adhere to, and as long as you are of sound mind, psychology should not play a role in anything that you're doing. Besides maybe upbeat psychology, you know, trying to maintain, you know, a positive attitude, no matter what's happening and how hard you're getting hit currently, know the ultimate outcome. That's the only psychology you really need. So, for example here, all right, being open and honest, all right, you're looking for large ABC structures. So, you know, from this uptrend, you know, just starting from back here, all right, there was no major ABC top at the very, very beginning here. Your first ABC top would have been here. All right, so this would have been your opening short hedge position. All right, and let's say that you were long. Let's say the last time that you had a really, really good long position of any sort of size was right here. All right, so it would have been either one of these two. It would have been either this one, so downtrend, uptrend, downtrend, or this one was definitely rocky, but it was a double layered, so it would have been downtrend, uptrend, downtrend. So one of these two positions would have been the last time that it was viable from a macro perspective to go long. All right, so you've been holding that long from here, all the way up until here. All right, this was the first time that we got a short trade that actually worked out. This one right here, uptrend, downtrend, uptrend, would have been an available option, and you probably would have maybe entered once right here, but it ended up not working out. So you get stopped out once and then price just continues rocketing up and it never came back down. So you never have to re-enter. All right. So this was the range. Based on price action, this was the ultimate hedge range right here. All right. So our goal is to take profit on our long. Obviously, we need to get out of it. We're in a huge amount of profit. So where can we do that? Well, we need to wait for the market to show us signs of bullishness. So the first time that it showed us a sign of bullishness was here. Downtrend, uptrend, downtrend. So this was the first time that we could have ever taken a long hedge position. Now, you probably would have taken it right here as well, but you would have been stopped out. A little uptick to the upside. Came back down. Came back up. Held for a while. Continue on. Now, we did have an ABC top here, right, which is equal to or larger than the one that we currently got ourselves in over here. But they're so damn close together in entry point, it doesn't really make sense to just go ahead and exit this one. Especially when if you're trading on leverage, you have funding. And most of the time, funding is in the favor of shorts. So if you have a short open, most of the time, you're covering the funding fee of your long, right? If they're equal in margin size. So as price, and once again, like as price action moves, you're moving with it. All right. So then we had an extension of the larger macro ABC. So yes, you would have been stopped out of this one, stopped out of this one, and then stopped out of this one. And then you would have opened up a new one right here. And then on this uptrend, we have an ABC. So not too crazy of a change of entry, but it's something. All right, so you take that trade. And if it's that close, it's really at your discretion whether or not you would do so. But then, once again, we have an extension. Price action just continues moving down here. Of this one. And this is our new long entry. And you maybe would have been stopped out right here, depending on what your stop loss was. But it's an if this then that statement. If this is still currently my largest ABC structure, and we are still above it, that entry point is still valid in my eyes. So even though you would have been stopped out gently, you would have just re-entered once it came back above. And from there, that was it. And then past that point, we had an equal or larger ABC short position right here. So you would have entered short off of that. Ended up coming down just a little bit. Came right back up. So like I said, getting stopped out is not an issue. Because one, let's go look at the long position from here. All right. If I get a long position from here that ends up working out, and I'm using like a 1 to 2% stop loss, so just say 1.5% for example, and I get to exit that trade all the way up here, that's a 94 R&R trade. 95 if you want to round up. All right, so R&R, for anybody that is not super clear on how the math works into it, I want you to think of every time you get stopped out as 1. All right, so if I get stopped out trying to find entries up here 10 times, when I just came off of a 94, I'm still net positive 84. And then the hope would be, and that doesn't include the small short trade that we had here. Maybe you make back 1 or 2 R&R. That does not include the new trade in the future right here. So 1 to 2%, so call it 1.5. You would then enter here off of this new trade. All right, that's a 31. A 31. And then if you're in a short trade from here, oh, I kind of screwed that one up. There we go. If you're in a short trade from here and we get something significant, you know, maybe we go into an A to B C and then an A to B C and an A to B C here. all right, then that's probably a 10 to a 20. All right, so getting stopped out is not an issue. Getting stopped out is just something that will happen. Obviously, if you increase your stop loss, your chance of getting stopped out becomes lower, and therefore your R&R goes lower. But obviously, you're not losing as much when you lose in terms of R&R. And there you go. And I trade on leverage, so I use Kite's risk reward calculator. It's just a small formula I came up with a long time ago to make sure that when I'm betting on leverage, everything is equal to what I want it to be, no matter what. So you can position yourself in terms of margin with any size, and then everything balances out. So if, you know, I'm using $150 and the margin size, you know, like let's say I want to use 10% margin size because maybe the minimum to trade that particular currency is a little bit higher than, say, Bitcoin, because maybe it's an altcoin. There's not as much liquidity on it. So let's say I want to risk 1% of my portfolio. So how do I get to 1%? Well, 10% of 10% of my portfolio is 1%. So my risk from margin would be 10%. And you can see down here, portfolio at risk 1%. And if you're not good at math, you can just kind of fat finger in until you get to where you need to be. So if I put in 5%, you see it goes to 0.5%. If I put in 20%, 2%. So I know I need to go between those two numbers, so then I get to 1%. So that tells me that if I lose, I'll lose $1.50, which is 1% of 150. And then my stop loss, all right, will determine how high my R&R is. So if I'm willing to be more risky, I will be more rewarded. If I'm willing to be less risky, I will be less rewarded. That is how this works. But the actual risk itself is always the same. If I lose, that's what I will lose. So $1.50. So if I'm willing to lose money faster, I will gain money faster. So the smaller my stop loss, the higher my leverage. So if I have a 0.2% stop loss, I'm going to be using 50x leverage. Now you can see that if I change my margin 20%, and then 5% on risk, which is still 1% risk. I'm still losing $1.50. So I increased my margin. I reduced my risk from margin, but my total risk from portfolio has stayed the same. Now my leverage has dropped in half. So even though my leverage is in half, I am still going to make the same exact amount of money and lose the same exact amount of money as the previous trade setup with 10%. Make sure everything that is going on is uniform so that you have no reason to be dumbfounded when something doesn't go your way. All right, so for anybody new, there you go. Basic premise. I seem to have lost my chat. Where did my chat go then? There it is. All right, just starting back from where I was. Young Buck says, how low is the NASDAQ going? All right, so once again, if we're looking at a chart, we start from a high time frame and we paint out any significant local lows within the current trend. So this is the current trend. All right. Well, technically, obviously, if you want to go immediate time frame, downtrend. All right. But within this uptrend, because if we want to find out where a downtrend might stop, we need to find out where the significant supports in the opposing trend are. All right. So obviously, we do have previous resistance, which could be used as new support right here. But in the immediate time frame, we have support here at 17,262. We have support here at 14,074. And we have support here at 10,450. So these are our current support levels. And then obviously, we would like to see previous resistance become new support. So we can kind of use that as a support level that could be used, but obviously that's not one that happened yet, so we need to use previous. But obviously these are within line. So so as of right now, all I can simply say is that currently, from a support level, we are bullish. We are bullish at 17,262 from a support perspective. Now, from a trend perspective, I do need to see one of two things happen. Either one, I need to see us bounce. Green. I need to see us bounce and then have maybe one more retest to create an ABC structure and then confirm to the upside, showing that even with the extra downside pressure and the little jump scare and confirmation to go short for most people, we were still able to come back above the previous support. And then from there, I would be bullish, especially because of the macro supports as well. Or we need to have a dead cat bounce and get back above 19,095 and stay above it. All right, so until one of those two things happen, I'm not 100% bullish at all. All right, we definitely could see continuation through this support level dramatically, and then beyond that point, I would be looking at 14,100 as the next possible low. All right, once again, we have previous resistance at 15,927, but that's not a confirmed support. All right, we need to look at things that have confirmed in the past to see what's possible in the future, and then anything that happens in the meantime, we work with the chart as it happens. So, NASDAQ, bullish from a support perspective, but not bullish from an actual reversal perspective. So I don't think it's a death scare right now. Now, if we're looking at this from like an ultimate time frame, of course, we do have an A to a B to a C on the macro time frame. So getting back down below that previous high would not be good, but it's not death. When it comes to super, super large macro time frames, do the ABCs have a significant effect? Yes, they do, but it doesn't mean that we're going to dump all the way back down to 2,000. All right, it just means that we probably would see more of a drop than you probably were expecting, but it could be down to 1,400 or maybe just 10,371. Like I said, I don't care where it goes. I care about how I react to it and how I plan around it. So, from a NASDAQ perspective, how could you have planned around it? Well, if we're looking at the uptrend, you have A to a B to a C, right? So this was like kind of your largest structure here. And then within that C wave, you have an A to a B to a C. So you had two possible positions where you could either sold off some of your stock as a hedge against whether or not we were going to see lower. And then you can, with the stock market, it works a little bit differently because obviously not everybody has access to like futures and stuff like that. You have to have like a certain level of account. So you're mostly doing buying and selling. So if you're doing buying and selling, you would sell off a portion of your stock at these levels in order to hedge against whether or not we were going to dump lower. And then at the local lows, and most importantly, if we see a large time frame hedge reversal, you would buy those stocks back. But if you're just buying it based off the local lows, like let's say you sold 30% of your stock up at these two top levels, you would buy back, maybe 5 to 7% here, and then 10 to 15% here, and then the rest here if we ever saw it. But then if we break back above resistance or see a larger time frame reversal, then you would buy back whatever you missed out on that didn't dump down to those levels, and then hopefully the market continues. A little bit of a different ballgame when you don't have the availability to short, but for all intents and purposes, that's what you're going for. And then he said, yeah, I'm learning to trade without them as well. I'm trying to learn Elliott Wave now. Good on you, man. Good on you. Real Trade, he said, good morning. Good morning, buddy. Love you. If you look on log scale, the NASDAQ has made a perfect ABC with 2 legs the same length from the top to bottom, but it hasn't bounced yet. If you look at the log, so I am on log scale. I'm a big proponent of log scale. That's how I like to look at the chart. It said the NASDAQ has made a perfect ABC with 2 legs the same length from top to bottom. So I'm assuming you're talking about a long ABC because you're saying bounced. Or are you talking about the macro short ABC that I just talked about? You said, can you check Solana? Yeah, I'll check it in a second. And why isn't your C so short? Isn't an A and a C not the same size? So once again, like I was telling you before, I understand the rules of Elliott wave, but that's the problem. Expectations of how the market is supposed to perfectly work out, in my opinion, is shooting yourself in the foot. Saying that one wave can't be longer or shorter than a specific wave, to me, is just not accounting for the variability of the market. So, and they said, why don't compound your first trade? So why got still one? Having a little bit of trouble understanding. So if you're asking if we compound, yes, we do. So like when you open up a long trade, and then a new long trade shows itself at a higher price point, you're closing the original and then opening the second, and with the new level that your account at, so like let's say you were at 1,000 and now you're up to 1,500, your 1% loss is now 150 instead of 100. So therefore your 10 R&R gain, instead of being 1,000, will be 1,500. So you're compounding the account from trade to trade. Yes, you are. If that's what you were asking. So let me go check Solana real quick. So Solana did have a previous ABC long position here, which is kind of what we're using as support at the moment. Obviously the local low support being here at 110. Actually pretty good trade actually coming up on Solana here for a good dump down just a bit lower. So if we're looking at this on a 2-hour time frame, all right, you do see downtrend, uptrend, downtrend, which did create the first ABC position, which we did have a gentle retest to the upside off of that. Obviously hasn't quite worked out the way that you would want it to. It is a pretty thin trend to begin with, so it's not really uncommon that would happen. But with us developing a little bit longer / thicker trend here, if we did have a little bit slight of a dump here, we put in that slightly lower low and then came back above, especially combined with the local low macro support here, that would be pretty awesome to see. That would definitely be something you would most likely want to be in when it happens. Of course, doesn't mean that that's the bottom. It just means that that's probably where there's going to be some sort of hefty retest, but it could turn into a bottom. Okay, so if we have a downtrend and we see a nice uptrend, doesn't mean that we can't come back down here and form a larger ABC structure and then get a new entry point somewhere lower. It just means that's what the market's showing us currently. And once again, it's not about putting expectations on where the market's supposed to go. It's about being in positions when the market shows you that there's a position to be in. And when those black swan, white swans happen, when everybody else is freaking out on what caused it, you're just smiling and you don't care because you're in a trade to one side or the other. That is the purpose of this. He said, can you take a look at U-Soil? I've been trading it on the 1 hour with a 0.5% stop loss. Yeah, we'll take a look at it. You said U-Soil? Let's see. So just looking at this from a larger time frame perspective, let's go ahead and mark out the local low support regions, which are here, here, and here. So in all reality, we just have to work with what we're working with right now. Oh my goodness. All right, can I get away from it? There we go. Boom. All right, so if we look at what we're currently in, we're in a gigantic A to a B to a C. We do have the lower low currently. So the confirmation to be in a long position would be if we are above 63,600, 63.66. So used to talking about Bitcoin. So obviously that's in confirmation with this support as well. So that's kind of a really good setup if it does end up happening. If we don't end up collecting support here, there is a momentary chance to collect support at 57.44. But beyond that point, it's pretty much a straight dump back down to 33.9. So there's really no support in this region between these two levels. So it's pretty fair to say that if we don't hold through the use of this ABC coming up here shortly, 33.9 would probably be the next stop. And then obviously before this, kind of fall off a cliff here, you did have an A to a B to a C right here, which you could have been using as a possible hedge position, which you would still be holding right now. All right, there's nothing telling you to get out of that trade. Absolutely nothing. So there you go. I mean, the only time you would get out of that short trade is if we, dumped lower, and then on a retest back to the upside, we looked like that. All right, then you would go ahead and, fall out of it, jump into the new one, and then go with whatever happened. Real trade, that's what's up, man. See, like that's always my end goal, is just creating the ability for people to see these things on their own, and not have to listen to anybody else. So I mean, that's a really good trade right there. And that's the problem too. Like, people run into psychological issues all the time. Maybe they did take this trade, but maybe they got stopped out of it once or twice on, this little like flippy floppy region right before it dropped. So they just said, screw it. Maybe it's gonna break to the upside. So let me not enter again. So then they don't enter again, and then it keeps dropping. And then they're like, oh shoot, it's dropping now. Let me go ahead and enter short now. And then it goes boop, and stop out. Oh no. Like, they just get caught up in their own heads. And then maybe they take that short position. They were, strong enough to hold on to it. And then this little region comes right here, and, they see it, bounce to the upside, and then they close that short position, but now they don't have any available new position. So then it drops off a cliff again, and then the process repeats itself. It's just the never-ending cycle. And technically, when we had that uptrend, you should have been in a long position as well, because we barely completed that long ABC. We did have A to a B to a C, slightly lower low, and then we had the bounce to the upside there. So you at least would have had a hedge position, maybe hopefully keeping your psychology in check while that short was working itself out. But of course, stopped out. Just trying to scroll through the chat, see if anything I missed. Francis, what's going on? Good morning, man. How you doing? Young Buck said, makes sense. Thank you, Kite. Do you see any entry point on LTC or short position on XRP? So let's check out LTC first. So I mean, on Litecoin, actually pretty good. So let's just go ahead and mark out the local lows. Local lows are kind of rough here. So I mean, these are our two main support regions. There's really nothing. Obviously, there's minor time frame supports and resistances, but in terms of macro, we really haven't created any major support at a significant higher point here. All right. Now, obviously, when we get into the smaller time frames, we did create support here at $80.58, which is the bottom of the A, beginning of the B, for our current largest ABC structure. So A to B to C right here. And we did put in the lower low. All right, so we have 80.68 is the entry point for the macro long on Litecoin. So, I mean, you know, if you wanted to jump the gun and jump into it now, you would be looking at, hopefully, if you're doing it right, you'd be looking at somewhere around like maybe a 6 to a 7% stop loss, which, you know, obviously if we come back up to the high here, would only give you about an 11.49 R&R trade. Obviously, if we are a little bit more patient and we do happen to come back down ever so gently, you can shorten that up to maybe a 2.5% stop loss. And then you're looking at, you know, a 30 R&R trade, which obviously is a lot more appetizing than an 11. So, something to be aware of. Obviously, you could jump the gun. All right. Not saying to do that, not giving you financial advice, but technically you could jump the gun. So if we're looking at this, obviously we have the macro local low combined with the ABC position. And then within the C wave, you have an A to a B to a C. And that entry point is actually where we're sitting. So it does look like the waves are a little bit rough in this lower region here. So it's a toss-up. So if you were to enter here, all right, then more than likely, you would probably want your stop loss to be around a 3.75%. Just so that, like, if we did dip down to that lower entry point, you would get stopped out of the first trade, and then you can go ahead and enter the other one, because then you could probably use a little bit better of a stop loss and not have as much rough price action, because the whole point is that at that local low support, you're going to do one of two things. You're going to drop through it and move past it. So yeah, you get stopped out once, you're good to go. Or we're probably going to see some sort of nice bounce coming from it. So the whole point is to get away from that region as fast as possible. Between these 2 points here, they're definitely, if the smaller time frames want to act up, we could do exactly what we're doing now, and we could just go all the way back and forth. So it's a little bit of a rough call there, whether or not you would want to do something like that. Which I might give it a shot. We'll see if we get lucky on that one. That's actually a really good pickup. Good shout. Tell me to look at LTC right now. And then on the larger time frame, we do have an ABC short position. Now, I wouldn't say in any world on altcoins, especially when you have this large of an ABC here, to just go ahead and just enter short at this exact region. All right, when you're working with very, very large macro ABCs, especially when there's a lot of time in between, time equals variation. So the farther you are away from the creation of a resistance or support, the more variation that support will have. All right, so you don't want to really just enter blindly on that. All right, so within that, you would want to try to find ABC positions. So if you see that the ABC short is confirming or close to confirming, you would want to try to find hedge trades on a smaller time frame that you can incorporate into the larger macro trade. So like I would be taking if I was purely playing LTC, I would be taking this ABC short position, but I would be taking it because of the macro position that could confirm, and then I'm holding that trade based on this. So the only time I could get out of this trade would be pretty much if we saw another significant short ABC, you know, like down here, for example. Okay. And then obviously that would still be in corporation with the larger macro as well. So just a bit more in line with it. So yeah, actually, before any time runs out, you know, I guess this is a good plug for FIMX. So for anybody that's interested, I am sponsored by FIMX currently. And if you sign up with the link in the description, it should be the first link. Any future giveaways, as long as your user ID is attached to that referral code, one, you'll be whitelisted, so you don't have to do any KYC. And two, the giveaways. FIMX is, in my opinion, a little bit better than LBank, just because some of the features they have, and obviously the coin offerings that they have, and I do believe they have a lot more liquidity. So, if you did want to give it a chance, it's there. No harm, no foul if you don't. But, you know, if you need a new exchange or looking for something currently. So let's go ahead and go open up a trade on Litecoin. Just to show anybody new the process. All right, so I'm entering off of what we just talked about. The current large macro C wave has an ABC at $83.31. Obviously, if we do happen to go lower, I'm not mad about it. There is another long entry point at 79.97, you know, or a tad bit lower, depending on how close you want to be. 79.87, yep. So we're pretty much at that entry point. So I'm going to go ahead and take a chance on it. So like I said, I do want my stop loss to be a little bit larger than Bitcoin, because obviously the more volume that is in a coin, the harder it is to move percentages. So therefore, using a smaller stop loss is the equivalent of using a larger stop loss on a smaller market cap, smaller volume coin. So we're going to go ahead and open up Kite's risk reward calculator here. We're just using a $150 portfolio, nothing crazy at the moment. So I want to go ahead and use about 1% risk on this trade. So I just need to set up the margin and the risk from margin in a way that makes sense. And I'm going to be using a 2.5% stop loss. Okay. So let's see what the minimum. Okay. So the minimum trade is 83 cents. So nothing crazy. So let's go ahead and put in $5. And if I want to lose 1% of my portfolio, 20% of 5% of 100% is 1%. So that tells me exactly what I need to use. I need to use 60 contracts on 8x leverage. So if I go over here and I go ahead and change my leverage to 8x long, make sure it's on isolated. I don't like to use cross. All right. You can get into trouble on cross in terms of like trades cutting into each other. You might have profit that you can use from another trade that you're not accounting on, so you can get liquidated faster. It's a lot to keep track of. I don't necessarily think it's appropriate for my trading style. That's all. All right, so we're gonna go ahead and open along here. 60 contracts at 8x leverage. We're gonna go ahead and open long. Our stop loss is going to be 2.5% below the current entry point. Is there a way to... I guess I can just do that. Alright, so it's almost impossible to get it exact. Alright, so our stop loss is going to be 81.33. So 81.33. And then we're looking at the stop loss estimated loss. So $1.3 and we're trying to lose 1.5. Okay. Now, obviously, a little bit of a mismatch in what I did here. So if we go ahead and go down to a 5-minute, what is the actual current price? All right. So $81.06. All right. So estimated loss, $1.48. So it lines up exactly with what we want. So we go ahead, open long, confirm, boom. And there we go. So we have our pre-planned stop loss. Once again, this is a macro hedge trade at the moment. So there's no need to set targets or anything like that. Obviously, you can always go ahead and play around with it. You know, and say, what if we get back up to 140? If we get back up to 140, you know, I'll make $40, which is, you know, 30% added to the portfolio if that happens. Yeah, 140 would be roughly 27.8% added to the portfolio, because if I'm willing to lose 1%, and if I win this trade, you know, say take profit at 140, 1% loss, 27.8% gain. That's R&R. Yeah. And that's the thing. It doesn't matter what level account you have, whether it's $150, if it's $200,000, you know, it's all the same. Yeah, the numbers are bigger, right? Getting stopped out almost immediately for $2,000. Oh man, to the average person, they would lose their mind. The thing is if you understand what you're doing and it's all math, well, then this number doesn't matter. Any of these numbers don't matter. Obviously, the end result is what really matters here. But like, you know, losing $2,000 sounds really bad. But on the opposite end of it, if I walk away with $50,000 and I only got stopped out twice, well, hey, doesn't sound like a bad time, does it? All right, it's like buying ingredients to make a pizza. All right, sometimes that pizza is going to expire before the customer buys it. So it's a loss. But when a customer does buy one pizza, they cover the cost of 3. It's a restaurant business, but with money. Money. And then you also wanted me to take a look at something else. Let me check here. Let me bring the chat back up. Long oil. I remember when faucets used to give a bunch of LTC sats for free. Yeah, there used to be a Bitcoin faucet that gave you like 0.1 Bitcoin or something like that. Pretty crazy to think about, right? Hello, Kite. Glad to see you streaming again. You changed my outlook on trading a long time ago. Right now, I'm sitting in that LTC long you're talking about. Oh my goodness. And we haven't even talked about it. You were sitting in it before I even looked at it. That's what I like to hear, man. I'm really glad. I'm glad that I can take those long breaks and there's still people that are having a positive impact. DXY dropping, market tanking. Isn't it usually the other way around, like an inverse correlation? Yeah, it usually is. Once again, I don't pay attention to stuff like that. It's cool to look at, of course, and some people ask me to look at it, so I take a look at it. But all that really matters to me is the assets that I care about. So at the end of the day, most of the time, like I'm not trying to toot my own horn here, but most of the time, all right, there was something showing you way beforehand that there was bearish or bullish momentum. And beyond that point, I don't care. All right. because it's all about hedge trading. So, I mean, you know, for example, I bring this up a lot because it is a really, really good example. Do I not have enough screen space for this? Okay. So, this is the FTX crash. At the time, it seemed really, really significant. People were expecting more of a drop. And in the beginning, nobody was expecting it at all. Because FTX was the good boy. But I was trading the smaller time frames. I had a long position from here, just based on this ABC. So I was long from this level. And I had a short position from here, based on this ABC. Okay? So I was in a hedge from those two levels. So when FTX crashed, I was in a short position. So we crashed. Market put in an ABC bottom here. You can go ahead. We got stopped out of this one, so I mean, there was no profit on that one. So this is the new long position. And then in order to get out of the FTX crash short position, a new one has to form. So we had A to a B. And as soon as the price broke above this level here, I'm out of this short position and ready to enter this one. But this one never happened. We just went straight past it. So now I'm just in a long position. And my dumbass at some point got rid of that long position way too early. I would have, oh my goodness, what I wouldn't give to be holding that position right now. But there's plenty of other opportunities to go ahead and jump in here and here. Beyond that point, there was really nothing. So, but I would have liked the bragging rights. I definitely would have liked the bragging rights to show somebody, hey, I'm long from right there. Like that. Oh God, I could be so cocky. I could jump on YouTube and say I'm the best alive, and not explain to people how my strategy works. And it was simple coincidence. But that's the thing, you know. When you set yourself rules on how things should be done, you can look back in the past on what you should have done based on those rules. And because it's all candlesticks, the rules are the same. Nothing changed. All right. And being able to recognize, and this is the part that people don't understand, you need to be able to see it before it happens. All right. So we're not even that deep into the B wave yet, but I'm pre-planning. All right. We have barely started this B wave, and it might fail. Might not actually, you know, be that aggressive of a B wave. But you need to be able to just spot the changes as they're happening. All right. So in the future, this could become a new entry point. So I don't need to see a fully formed ABC with all the candles and all the trends to know that if this, and this were to happen, then this would be my entry point. All right. Same thing like if we're over here and we have an uptrend and we have a cut of the trend, then if we do happen to have one more uptrend and we put in that slightly higher high, well, then that would be my short position. I don't need to see what I'm seeing now. That's how it would have been done then. Now, at the time, I was sulking my own despair because life is hard and, you know, I'm the only one going through it. That's a joke, by the way. Like, that's just a play on words. It happens to everybody. But yeah, like I was saying, I was just out of the game. Just wasn't paying attention. How did you overcome trading psychology? I'm struggling a bit. Please shed some light. Time and really drilling in your head what the end goal is and how you're going to get to it. All right. So obviously I've been doing this since I was 17. I'm 25 now. So 8 years. And to say that I was good in the very beginning is a straight lie. And even back then, like I was very upfront, like I'm just going through it. I'm just learning. Obviously I made lots of money, most of it luck, but each time I lost money, I looked at it objectively. And most of the time it was my fault. You know, jumping into trades too early, not waiting on signals, using too many indicators, blah, blah, blah. So I looked at my limitations and what kept getting me in trouble. One, it was not having the calculator. Like this was the beginning of when things started getting good. All right. Because to first have some sort of rule set, you need to know exactly how much you're winning, losing. Bare bones. That's the basic. So to me, because I was a leverage trader, I needed a way to simplify to make sure that no matter what, I knew exactly how much risk I had and how to make sure that from asset to asset, depending on how much leverage I was allowed to use or whatever, I knew exactly what leverage to use. So I made the calculator formula. Someone obviously with more talents than me turned it into an actual calculator. Beforehand, I would just do it by hand, which at this point, I've been using the calculator so long, I don't even remember the formula. But hey, you know, I would like a little bit of credit. I make myself sound like a mathematician when it's actually just very basic math. But to me, it changed everything I did. So to me, it is profound. It is a big deal because something so, and that's, once again, it all comes back to that something so simple can be so powerful. So that's the restored calculator. So simplifying the math of it, in terms of risk, leverage, and all that. And now was strategy. How do I say yes or no? Okay. So then I found Elliott Wave and I slowly transformed that into ABCs, but we were still kind of in between. We were finding out like, okay, I get myself into an ABC position, it's working out, and I target the, 1.618 or the 0.618, the 0.32, and we make profit, but we were getting stopped out a lot, so it wasn't really making great use of the target. Because sometimes it would shoot way past the target, and sometimes it would go just shy, and then I would start freaking out because we started turning around. So then I would start flip-flopping. So that led me to the conclusion that targets were the problem. Expectation. So instead of counting on always having the exact target hit, I count on just the market moving. All right, so then if I just need the market to move, well, I probably need to be on both sides because it's got to move to one side or the other, right? It's not going to flatline. I mean, from a larger perspective, sometimes it flatlines, but you can cut the time frame and we can see clear movement. So hedge positions now became a goal. So I developed a way that made sense to me on how to enter those hedge positions and then exit those hedge positions, hopefully in profit sometime in the future. Beyond that point, it's just about continuously drilling in my mind what I want to do and how I want to go about it once I'm in it and how I want to exit it. And if you really, really need help, then I do suggest, unfortunately, putting yourself on a back burner and doing what I'm doing. Use a $150 account. If that's not enough for you, $500. If that's too much for you, $10. Obviously, you do have to meet minimum trade requirements like, 80 cents of margin or $2 of margin, whatever it might be. But you get the point. So that way that there's no pressure. Because obviously, if you're just going headfirst into it with a $150,000 account, well, then there's a lot of pressure, right? What if it doesn't go right? But if you take a $150 account and you get it up to $700, well, because you use the restored calculator, because you used a strict rule set, there's no difference at all between a $150 account and a $150,000 account. If you took $150, you can turn it into $700. You can take $150,000, you can turn it into $700,000. The math is all the same. The only thing that matters at that point is you. So you need to work your way into it. So it's just about setting those rules, following them, making it a habit, and having trust in what you're doing. And then from that point, everything else comes along generously. I use Bybit for the moment, but I'll keep in mind Femex. Thank you for the LTC explanation. No problem, man. Appreciate it. Do you ever use any other kinds of candles other than the regular ones, like Hakonishi? And yeah, so I'm currently using Hakonishi candles. The reason why I use Hakonishi candles is just because it's easier to identify the trend. I don't have any issue identifying trends with regular candles, but I do find Hakonishi candles more pleasant to look at for my trading style, because a lot of what I do is based on absolutes. So I'm typically looking at wicks anyways. So I don't really need the regular candles, because I'm looking at what was the maximum on each trend in order to kind of maximize profits, hopefully. The fear, bro, is inevitable, but these crypto exchanges are huge manipulators. I mean, that's been the running theory for so long, right? And I just don't subscribe to it. Like, I'm not naive. I know there's shady shit that happens all the time, but I've had people come into my chat and say that the exchange purposely manipulated the price of the entirety of Bitcoin to stop them out for $7. So they get it stuck in their head that everything is against them. They get stuck in their head that no matter what they do, something's always going to go wrong because someone else is causing it to them. When you understand that you're playing in a game with hundreds of thousands of millions of people, all taking separate trades with different ideologies, different strategies, there's going to be moments where it feels like everything works against you. But there's hundreds of other thousand people that think that way as well. You're not special. Mark's not out to get you in particular. And once you remind yourself of that, well, then you absolve yourself of the sin of losing. That's the problem with most traders. They think it is a sin to lose. But not to be too cheesy here, Tom Hugard, the title of his book, which I 100% agree with, because like I said, Tom Hugard, as I was on my trading journey and figuring out what worked for me and what I liked, as soon as I watched the first seminar I've ever seen from him, I'm like, this guy actually knows what he's talking about. I can go on crypto YouTube for 7 hours and maybe find one or two people that actually know what they're talking about. And here's one of these guys that would typically, I would just write him off as a guru or some example. I'm like, holy shit, this guy's on one. And the thing is that to most people, he's saying the exact opposite of what they want to hear. But that's why he's successful. So the title of his book, Best Loser Wins, is exactly correct. The person who walks away with money in the market is not the person who finds a strategy that works 100% of the time with 100% profit, making money left and right. It's the person who understands the limitations of the game and can figure out a way around it while still participating in losses, because they are inevitable. Mental losses are inevitable. Financial losses are inevitable. It's all in how you react to them and how you plan around them for future losses that will determine the future profit. He said not entirely, but for like 20 to 2 hours, 2 to 2 minutes or whatever, we'll change the game. And I'm very scared to look at my trade. I follow your strategy of not listening to people. I started out with $20 and made $800. That's actually pretty fantastic. It's a lot of risk. All right. But I'm glad it happened. But after I started watching Jason Casper, traded 40x. You traded 40x Bitcoin, and he was. Man got greedy and lazy, ego rising. Maybe I should read that like someone from London. So man is you. Man got greedy. Yeah, I mean, it happens to all of us. It's a trap of being a human. I mean, when I did the $100 to $100,000, I thought I was hot shit. I thought I was the king of crypto YouTube. And I looked down on other people. You know, and obviously was pretentious when I was talking. And that's just unfortunate of being a human. Obviously, it's something to watch out for. And I do regret that time. But I do think it's something that needed to happen for me and a lot of people to show those possibilities. And I mean, to some certain extent, I should have felt that way. I mean, that's a really good feat. So in some way I was like complimenting myself, but obviously there's negative aspects of that I would have changed if I could go back. I thought I wouldn't do those things, but I ended up doing the same thing. Like, it's hard when you are in that mindset. I got greedy. That was me. Yeah. I mean, we've all been there. You know, you're trying to chase a revenge trade, trying to get the money back. And because you had such a roar to the upside, you have extra confidence. So therefore, your risk doesn't change. Because that was one thing that I factored in with the $100 to $100,000 challenge was, yeah, going from 100 to 1,000 is huge. But it doesn't mean that I need to get just as fast to 10K. So I was super, super risky in the beginning to get the account started. And then once it got to 1,000, I dropped the risk down to 10% per trade, which is still risky, very risky. And then once we got to 5K, I dropped it down to 5%, 10K, 2%, 50K, dropped it down to like 1, and then so on and so on. Until we were at the top of the bull market. Now, I mean, I didn't get all the way to 100,000. I think I got to like 86,000. Obviously, 100 to 100 sounds a lot better. But I did eventually, at some point, you know, get it past 100,000 because I took the money and then added it to my other accounts and obviously bought a stupid amount of stuff with it. Computers, cameras, TVs, cars, DoorDash. Dude, so much DoorDash. Oh my God, so much DoorDash. Giving some away, you know, paying off other people. Like, it's, you know, it is what it is. But yeah, like, I get what you're saying that, like, once you enter a trade, you know, like that. But that's the thing. If you're using appropriate risk, you should be able to stare at this all day long, no matter how close it gets to zero. And when it gets to zero, you go, that sucks. But you can either wait for the trade to reconfirm itself, or if there's another trade available, you jump into that one. There should be no pressure. All right. Like I said, if I lose this trade, I lose $1.48, which, sounds like nothing, but it's the same exact math as if I had $200,000 and I was willing to lose $2,000. So it's all dependent on how you look at it, right? Losing $2,000 instantaneously sounds bad, but if you understand what you're doing, then it's just a part of the game. It's just a number. Yeah, I think that might be where we close. I feel like there's, okay, XRP. That's what I was missing. Someone was asking me about XRP earlier. All right, so XRP, there's really nothing to be said about XRP right now. Nothing really at all. I just want to see if that is on every chart. Okay. So this wick is on nearly every chart. So yes, it is real price action. It's not something that just happened on one chart. But with wicks that extreme, especially when it's such a deviation from the trend, I would, in this case scenario, maybe delete this portion of the wick as like abnormal overreaction data. And then that would look a little bit more in line with what really happened. And then obviously we had uptrend, downtrend. But, it's one of those things where you have to be careful, because I do understand what someone might think. They might go, well, how can you delete this wick here? But then say like, oh, this straight shot to the upside. Yeah, we can use that. And like I said, I don't have a clear answer for that. To me, it just looks like with what price action was doing, this just looked like a hyper overreaction that maybe broke a couple buy walls and it slipped a little bit. This just looks like a retest of previous resistance, whereas this kind of just looks out of the ordinary. Now, I'm sure some of you guys will agree with me. So like I said, a lot of what I do, there's rules that I'm following, but most of it's looking at the chart and trying to decipher just the feeling that I'm getting from some of this stuff. Not everything, of course. But there's some points where you have to say like, okay, maybe that's just not appropriate. And that this is more in line with what reality was. So in this case scenario, you would have ABC bottom, and then you would have ABC long position here. Nothing quite significant on this trend to enter on. So like unless you jumped in at that position there, there's nothing in reality that would look appetizing to enter in this region. But yeah, like that's all I see for XRP. Obviously this was the ABC top level here. So you would be in a short position from here, long position from here, and you're kind of just waiting out, see what's going to happen. Is that a $4 trade or $1,000? It's $4 margin. And then the size is $83. It's just another thing that I do differently, in my opinion. Because the whole thing is if like someone actually wants to learn how to trade, they're going to listen to what I'm saying. Whereas someone that loves the idea of trading, they're going to jump on here and they want to see $100,000 trades with tens of thousands of dollars in profit. And to them, they see that and then they start listening. I don't want those type of people here, because typically those are the people that are, you know, a little bit scared to admit reality. So for example, like when, you know, I call for a certain number, and once again, calls are not me saying we're going there. It's saying here's what the availability is. They're, you know, those types of people that just like to see big numbers. They're the ones that are like, that's never going to happen. That can't happen. And then it may or may not. And then sometimes it does. And they're nowhere to be seen again. Because I think they were just betting to the wrong side too heavily. There is no wrong side. There's wrong moments to be in one side. But there is no wrong side. That's the thing. Like, you know, people are freaking out over tariffs and DXY and dollar and oil. And I'm sure there's good reason to do so. But those are the same people that will not be in long trades, even though some of the market is showing availability for long trades. And to me, it makes no difference. Because the risk is good. So why not take the play? Like the same thing with KDA. You know, it's all about risk to reward at the end of the day. Whether or not something's going to work out. If it does or doesn't. So for me, when I saw KDA, saw the availability and how much money needed to come into the market for us to see massive gains, I took the chance. Unfortunately, it did not work out. But it's about R&R at the end of the day. Asset does not matter. News does not matter. Okay? Like I said, I'm not saying that it truthfully doesn't. I'm saying that from my perspective and how I trade. Once again, keeping things simple and polite. What's Tesla at? People are so happy when stuff like this happens. I'm like, it's just a chart, man. So, Tesla, gigantic ABC top. Saw that coming from a mile away. So, I mean, all the way back here in December, you were basically marking a top. So, ABC top. So, at that point, if we are continuing to hold below it, the market wants to come back down and wants to retest local lows. Only local lows I see here are here, here, and here. All right, so those are our levels of support. So what it looks like is going to end up happening, and we can kind of just draw this and leave it for later, is we have an A to a B to a C. It's probably going to extend downwards. We're probably going to see a retest of 182. From there, probably going to get a bounce and a retest back up to this previous B. If not, a little bit higher, but more than likely somewhere around like 304, maybe a little bit of an extension. And then more than likely, probably will come back down to retest 182 with the possibility of putting in a lower low at this local low, but then soon enough getting back above and having another try to the upside. Beyond that point, I'm not going to sit here and be like, oh, we're going to keep going up. We're going to go all the way to 1,000, 150. I don't really care beyond that point. That's just like the quick set of actions on which the market could take, because I'm looking at what the market wants to do. Because once again, the market, its simple job is to find the appropriate price of an asset at any given point in time. So how does it do that? It does that by testing supports and resistances. So knowing what the market is going to try to do can help you understand what the market might do. So if we're retesting previous support, well then once we confirm support, we're going to want to retest previous resistance. So previous resistance would be at the B, previous resistance would be at the top of the larger macro ABC here. So, you know, just kind of eyeballing it, shooting for the middle of those two numbers. That's kind of where we would end up as a ballpark. All right, so if we get rejected there, then we would want to go retest an even lower support or the same support. All right, so at that point, we would be looking at 183 to 138. So ballpark it, aim for the middle. And then from there, if we find support, then we were going to be retest a higher resistance. So obviously, we would want to retest the macro resistance would be here. So it could end up stopping there, or we could push just a tad bit higher and create a larger ABC macro. And then you could keep going in and you keep going. So you can see why, like, I'm just stopping here. I don't care if it goes higher or if that's the top or whatever. But in the immediate term, this is what the market would like to do. Beyond that, I have no clue where it goes. And once again, I still don't have a clue of where it's going to go. I have, over the many, many years of my experience, I know what it wants to do in terms of testing. That's it. So we definitely could. You know, like if someone out there just decides that Tesla's not a good company anymore, we could break through these supports. But then normalcy comes back in. So if we break through these supports and we end up here and we find support, well, then we want to retest here. Like it's a simple game that you work yourself through. And then obviously shit happens. But we don't care. All right, we plan on it. When shit happens, that's when profit happens. Because it doesn't matter which side it happens to. I have another question. I'm in a short position on BNB from 645. I don't know what to do now. After I see it, it's a long position. Hold on, I can't see that. After I see it, it's a long position or not. I don't quite get the last part, but I'm just going to look at the chart. Listen to me. Okay, so you said you're in a short position from 645. Is it from back here, or did you snipe that? You might be rounding. I don't know. But I mean, okay. So first off, if you made it off of this ABC, oh my goodness, congratulations. That's actually phenomenal ABC right there. It's not like a huge structure by any means, but just I love to see the slightly higher high, slightly lower low. Those always are awesome to see. So I'm going to assume that's the ABC that you took your short off of. So that's the only thing that you have open on the board right now, right? So if that's the case, I understand the grinding feeling to be in either a hedge or get out of that short trade. All right, so at the current moment, all right, the only available option for a hedge trade would be downtrend, uptrend, downtrend. Okay. Now, that is not a significantly large structure, and this is why I tend to hedge trade on large structures. Okay. On that particular position, I wouldn't necessarily say is large, but I don't think it's a bad one to have. All right, we did not put in the lower low off of this downtrend, so at the moment, we just have an A, and this is our B. All right, so we can assume that we're in a C wave. All right. Now, it might not work out like that, but that's what we're going to assume, because we did not... We retested this previous support as best as we could, and then we had to test the upside. Got rejected. So now, if we get a rejection here, we want to assume that the market wants to retest the previous support. So if that's the case, then this is most likely going to be the pattern that we see. All right, so the hope would be either one, currently you have an A to a B on the current trends. So within that B wave, you do have an ABC here. So that could be telling you that there's going to be one more try to the upside, and this will be the ultimate position before a dump to here. Now, this is why it's important to have multiple assets, so that just in case, you know, there's a chance that this was the bottom. Okay. And that we don't have to go put in a lower low. So having the opportunity to go long Litecoin or long Bitcoin, that you don't necessarily always have to hedge on the same token. You can have a hedge on an opposite token as well. Obviously, you want them to be in some way, shape, or form competitive with each other in terms of percentages. Like, you don't want to go trade some shit coin that can move thousands of percents a second with something like Bitcoin. That's not a good comparison to hedge against. But, you know, like Ethereum versus Litecoin, you know, that's comparable. Bitcoin to Ethereum, that's comparable. XRP to Litecoin, that's comparable. You want to find comparable assets that move similar percentages, so that way the hedge is more in line with itself. Yeah, I mean, if you have this short trade open, you know, if you haven't taken this one already, or if you have the opportunity to take it in the future, you could take that one. Right? And the worst that can happen is you get stopped out of it and then it dumps all the way down here. Now, obviously, if it starts doing one of these numbers, right, maybe you just hold the short position and then hopefully it gives you something a little bit more precise for a long hedge if it doesn't go off a cliff here. But just looking at this, if you have that trade, what's your stop loss? Because for me, probably somewhere around like, you know, 1.5% to 2% would probably be somewhere where I would be sitting. So currently, you know, when this trade enters, that's a 5.7 R&R. So if you go ahead and get stopped out 2 or 3 times, you're not really making that much money. But that's the whole point. It's about finding positions to be in. All right. And then when things rip, they rip hard. So, You know, if we dumped all the way back down to here, that short trade would be up to a 14.49. So if you get stopped out 2 or 3 times trying to just grab a hedge position and then we still dump, it wasn't all for nothing. So you end up making that money back plus some. So don't be too afraid. You said you're in a 2.5%. So somewhere around there. All right, so I mean, if we came back down to this lower low, or this local low, you'd be sitting at about a 9 R&R. So if you take this trade with a 2.5% stop loss, and with a 2.5% stop loss, at most you're probably going to get stopped out maybe once or twice, if that. If it continues to just do jagged. But like, it would have to be pretty severe in order for me to say continuously enter that. But yeah, that's your current setup right there. Obviously, this is 2BD, TBD. They're always TBD. But you never know what can happen. Said just short ETH and close your eyes. It works. It's a good point. I'm taking a look at ETH here. So let's go and take a look at the local lows. Here. 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 And there was one here we used it as momentary support. So is what it is. We did end up putting in the higher high, so that's a full and complete ABC right here. So now we're working on the C wave. I mean, yeah. I mean, on the smaller time frames, we do have a little tiny ABC going on, so it's completely feasible for us to get a little bit of a bounce here. Probably come back up and retest this previous support region, but more than likely, because of how thin this trend is, I would like to say that there would be one more retest, at least. It doesn't have to. Once again, it's just what the market probably wants to do at that point. But if that happened, that would look pretty good. Local low support, bullish ABC turnaround, try for the upside once again. And then maybe that time, we just go up a little bit higher. But we put in the macro ABC top there. Yeah, I think that's it for today. Took a look at a lot of the bigger coins, and as always, I love explaining to new people the thought process. And, you know, you asked me about psychology earlier. And, like, how do I help my own psychology? One, just talking to you guys. You know, like, explaining my rules and how I do things over and over and over again helps me tremendously. And even if you don't live stream or whatever, just as a test, okay? Pretend like you're talking to somebody and you're teaching them and to the best of your ability, play pretend, be a kid again. To that imaginary person sitting across from you, explain in full how they can go from 0 to hero. And the more times you do that, the more sure you're going to be on what you're doing. Because you're going to find yourself saying things. You're like, maybe I shouldn't do it that way. And you can adjust. No harm, no foul. Said 1650 is my target. Yeah, that's a little bit above support. Pretty good area to hit. Support here at 1534. Can't hold 1534. Probably be dumping down to 1070. Alright guys, let's go ahead and choose a song for the sign off today. Hopefully I'll have my camera set up by next time. So I want to use my green screen and stuff. So it's a little bit more to get set up here. But yeah, let's go ahead and sign off with a song. And I'll see you guys on the 7th. So for me, that is Monday. And then, you know, if it makes it easier for anybody, like 7 a.m. EST to GMT is 11 a.m. So if you're GMT, I know a lot of people have GMT -1, +0, whatever it might be. So it might be easier for you to understand that. But like I said, from my 7 a.m. To about 9 a.m. is when I'm going to be starting the streams. And then they're going to go for however long, you know. So, like I said, I will be there. And I'm going to be here from now on. But with that being said, guys, I appreciate you very much. And as always, trade safe. Bye!
Lately I've been stressed out, I'ma be alright though. Move a mile a minute, cause any day I might go. Can't take the cash when the coffin hit the ground, so I'm blowing all this money like I'm trying to cool it down. I ain't never had shit but a dream, and the mama telling me I can be anything that I wanna. I don't watch television, got enough bad news. If you back me in a corner, I do what I have to. If you see me doing well, it's because I went and got it. Making something out of nothing, turning problems into profit, man. Impossible is nothing if you treat it like it ain't. That's why I treat it like it ain't. I don't know, it's just the way I am. My eyes bleeding red until the AM. Hallelujah, I still moving with the day end. All my demons chasing me, I gotta slay them. I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient. They tell me to relax every time I tell them no. They confused cause I'm heating up, but still I'm hella cold. It ain't coincidental that my dentals never show. I ain't got a lot to smile about until I get the gold. See, my standard's so high, but I'm sitting so low. Forget how they used to treat you, that's a big no-no. Watch the body count climb when we kill them with success. I need everything and nothing less. I don't know, it's just the way I am. My eyes bleeding red until the AM. Hallelujah, I still moving with the day end. All my demons chasing me, I gotta slay them. I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient. One last thing, I like singing sad songs. That's how I deal with depression, so don't clown me like that's wrong. I'm not less of a person, cause I talk about my feels. If I never ever did, how the fuck could I be real? This that motivation music, yeah, I wrote it for myself. Cause when I start feeling low, no one can save me but myself. This for me, I know who I am inside. Still I'm working like I'm never satisfied. I don't know, it's just the way I am. My eyes bleeding red until the AM. Hallelujah, I still moving when the day ends. All my demons chasing me, I got to slay them. I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient. I got a lot up on my mind, trying to see the silver lining, but I don't have the time to be patient.